Brian and Courtney, Paying Capital Management for your weekly Money in Minutes. We've been talking a lot, Court, about just investing your money, and number one, cash is trash. Number two, if cash is trash, you need to invest your money, and diversification is the key. So you want to spread your money out over different types of investments. We want to take it a step further today, and we want to talk about, as you're saving your dollars, it's important to buy things that are at lower prices as opposed to higher prices. So buying low, selling high seems like a pretty simple concept, wouldn't you say, Court?
I would think.
Very simple, right? So what does that mean in plain English?
Yeah, so when you actually look at the overall markets, we actually have this really nice chart for you guys, because there's about a dozen different asset classes that you can look at. And how are you going to know which one you should put your money into at any given time is the real question. So when you look at this here, you'll see all these different colors here. Those are just your different categories of the market, and you'll see they're all over the place. Some are working in some years, they're their worst performer in other years. So what you want to do in the short term is make sure you concentrate your money into whatever is not working, meaning the prices are really low right now. Because eventually, as you'll see on that chart there, at some point in the future, it'll go back up and it'll be your best performer. And if you buy when it's low in the long run, that's usually the best thing you could do.
Wait, stop the press, Courtney. You're saying buy something when it's doing bad, as opposed to buying something when it's doing good.
Exactly.
That sounds crazy to me.
Sounds counterintuitive. It does. I can tell you it goes against human nature, and most people do not want to do it. But whatever everyone else is disliking right now is probably your best buy.
Okay, so if I'm looking at these colored boxes that you put up here, what I see here is, so last year, for instance, if I'm saving in my portfolio, so whether it be my retirement account or my regular savings account, and you can see all the way at the bottom here, it looks like EM equity, which means emerging markets. So what are the emerging markets, just so I'm clear on that, Court?
So those are more underdeveloped international countries, so places like Brazil, China, India, those international countries for you.
Oh, Brazil's on my list of places to go. And then not the reason to make an investment decision, but, so your point, if I would have bought when it was down 14% last year, and I look at this year, year to date, it's the best performer. I get it. Whereas on the flip side, had I bought large cap stocks, you can see here it's closer to the bottom. So, it makes sense.
Right.
Yeah. So pretty simple technique, but it seems like if you're just saving blindly and you don't have some sort of strategic way of buying what's low versus buying what's high, you can't really take advantage of the fact that different investments move at different times. So it's key to have a strategy in place. Again, as always, cash is trash, diversification, and it sounds like we want to buy what's low, not what's high.
Exactly.
Yeah, simple advice, practical advice. That's your Money in Minutes. Have a great day and be bullish.